Anindya Banerjee, pardon me. He's SVP Currency and Commodities Research, Kotak Securities. Mr. Banerjee, a very good morning to you and hope you're doing well. Let me start by getting a quick take from you on what is the directional position you see on the rupee.
Thank you for having me. A very good morning. See, the Indian rupee should be able to benefit from dual tailwind, which has emerged over the past 1 week or so, especially over the past couple of trading sessions. That is, the US dollar index has fallen quite sharply, and we are seeing a bit of appreciation across the Asian currencies. So that can be a tailwind for the rupee. Second factor is that the liquidity operations from RBI can also be quite beneficial because it tends to help growth. So better outlook on growth and at the same time a weaker dollar index can actually help the Indian rupee to come towards 86.5 levels on the spot in the coming days.
Okay, so 86.5 level in coming days sounds good, sounds directionally positive definitely for the rupee. I'm just wondering, Mr. Banerjee, how you see the impact flowing through of what the RBI has announced overnight, more liquidity measures. Does that boost support?
Primarily these swaps should be, it should have neutral impact on the spot rate because these are designed to have an impact on the money market liquidity, because on one hand, they are sort of giving the rupee loans and taking the dollar as collateral, which they will reverse after 3 years. But what happens is when the dollar is appreciating, as it was, let's say, till last week, in that environment, it tends to have some positive impact on the spot because what happens, the RBI has to take dollars from the market to give the Indian rupee. So last time when they had done the swap operation a week or so back, on that particular day, we saw the USD rate jump by 20-30 paisa. But as I said, the good thing is that now the dollar index is falling. So in that environment, it shouldn't have any negative impact on the Indian rupee on the spot market, and it should have a positive impact on the overall liquidity.
Okay. Point well made, Anindya, and that reinforces what we've been speaking about as well. I'm just trying to understand what your base case assumption is for, and can you make a base case assumption for the dollar-rupee pair and for the rupee for the rest of the year, given that there are so many uncertainties about the dollar itself?
Right. See, 2025, our view has been that it's going to be a year when we'll see unprecedented volatility in the currency market because the Trump's trade war is going to escalate with time, especially the trade war between America and China, because this America First policy basically tries to create the production, US as a production hub, which means it will come at the expense of China. So in the coming months and quarters, we could see the trade war escalate, which in a way is a slightly positive for the dollar. But at the same time, we have to also understand for America to have any kind of manufacturing base, it cannot afford a strong dollar. So eventually, America has to look at some ways of devaluing its currency. Whether that becomes its official policy or not, we have to see. So that's the reason why 2025 we could see unprecedented volatility on both the sides, in USD and on all the currency pairs.
Thank you so much, Anindya. Thank you for joining us this morning. Anindya Banerjee there, saying you could see strength continuing. 86.5 for the rupee to the dollar is where he sees it, perhaps going 86.8 today. Not half bad. Rupee continuing to be strong. Good to see that on the screen, but it's largely due to a weakening dollar.